Bed and Breakfast Financial Plan Guide. Are you looking to start a bed and breakfast? If yes, then you need to develop a detailed B&B financial plan. In fact, understanding and projecting your B&B's financials is probably the single most important activity you should be doing right now to gauge the size and profitability of your project. What's more, if you plan to get on board an angel investor or financial sponsor, a detailed and robust bed and breakfast financial plan is a must in addition to your business plan document to make a strong case. Before we dive in our detailed guide, you might be interested to check out our ready-made bed and breakfast business plan template that includes an automatic and fully customizable pro forma financial model in Excel tailored to the B&B business. Without any further delay, let's see what are the main sections of a winning bed and breakfast financial plan. Bed and breakfast cost forecast. Let's start by looking at the costs involved in starting a B&B project. Costs are usually divided between the direct cost of service or cost of goods sold in case your business is about selling products rather than services, and indirect operating costs. In the case of a bed and breakfast, the direct cost of service includes all the expenses directly linked to the offering, namely the cost of food, beverage, and consumables such as soap, shampoo, tissue, or toilet paper provided as part of the room rental service. Some B&B managers also include the commission fee paid to booking agents, as these expenses are directly linked to the service rendered. These costs are usually variable because they vary based on the number of patrons, the occupancy rate, and the seasonality of the business. On the other hand, indirect operating expenses of a bed and breakfast business include costs that are rather fixed, such as the rent in case the property is rented, staff salaries, utilities, or marketing expense. These expenses tend to recur on a monthly, quarterly, or yearly basis and are more predictable than variable costs. Bed and breakfast capital expenditures. Now, what about the cost of purchasing the guest house itself? If you plan to buy a B&B property rather than renting one and opening it to the public, then this is considered a capital expenditure. In fact, all investments in fixed assets such as land, properties, vehicles, furniture, kitchen equipment, and other similar items are usually capitalized rather than expensed. This means that these expenditures are actually considered as assets rather than liabilities for the business. Their depreciation, however, is accounted as an expense in the profit and loss statement. Make sure you always distinguish these capital expenditures, also called CAPEX, from operating expenses, also known as OPEX. Bed and breakfast startup costs. To understand your B&B startup costs, you need to list all the expenses you may incur before launching your guest house. These may include licensing fees, cost of furniture and equipment, cost of landscaping, branding, and website development fees, among others. In case you plan to invest in a property rather than rent one, you need to include this expenditure or at least the initial deposit as part of your startup costs too. Your startup costs usually determine the initial capital you need to set aside to start. However, most entrepreneurs raise an even higher amount of funding in order to finance the first few months of operations and ensure a comfortable launch. Bed and breakfast revenue forecast. While costs are usually fairly easy to predict, revenues are usually harder to model because you simply cannot know in advance how many reservations your guest house might get, especially not in the beginning at least. But fear not, this is where a thorough market analysis is handy. By understanding your specific market dynamics in terms of trends, customer demand, and seasonality, you can make educated assumptions to gauge your occupancy rates during various seasons of the year. For example, your B&B might be located in a summer holiday area where there is clearly a high season from May till end September and a low season from October till April. During the high season, your occupancy rate will tend to be high and even reach full capacity during the peak months of July and August, while in the low season, it might drop you below 50%. You get the idea. Now that you have estimated your monthly occupancy rate, You can simply forecast your average revenue from room rentals by assuming an average room rate that varies depending on the season. While modeling your revenue, don't forget to also include booking add-ons and extras such as meals, weddings, private parties, and events. These additional revenue streams can add up to a substantial amount and should not be overlooked. Bed and breakfast income statement or profit and loss. One of the main statements investors focus on is the profit and loss or income statement forecast. Guess what? This should also be your main focus if you are serious about understanding the profit potential of your upcoming bed and breakfast project. So, what is the B&B profit and loss statement, or simply P&L? You can think of the P&L as a simple equation. Revenue minus costs equals profit or loss. It is a table that lists your revenue items from which you subtract your direct costs, your operating costs, your depreciation, your interest expenses, and your taxes. You end up with your net profit. The net profit is the actual value your bed and breakfast has generated over a period of time. This is what you and your partners will share as dividends and returns on your investment. When the net income is positive and significant, this means your B&B is thriving. When it is negligible or even negative, this means your operations need improvement to turn profitable. But don't confuse net income with cash flows. They are two different things. Sometimes a negative net income can still mean a positive cash flow and vice versa. More on that in the next section. Bed and breakfast cash flow statement. Your bed and breakfast business will always incur cash outflows and receive cash inflows over a certain period of time. Cash inflows happen every time you receive money in your company bank account in the form of checks, wire transfers, online card payments, or actual cash. These cash inflows usually come from the sales invoice paid, online booking fees, or even the sale of a used asset. For example, your old company car. Cash outflows occur every time your B&B bank account pays money to third-party suppliers, pays staff salaries, or your property's rent, among other things. It is important to distinguish between a cash inflow and a sales invoice. A sales invoice is usually registered on your B&B income statement at the invoice date, while the cash inflow is registered on your statement of cash flows at the actual payment collection date. In other words, when your bank account actually receives the money. Similarly, it is important to distinguish between a cash outflow and a liability. So, in a nutshell, the total movement of cash inflows and cash outflows over a certain period of time is summarized in your bed and breakfast cash flow statement. This table usually has three sections: cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. This statement is very valuable for investors who care about the cash generation potential of your B&B project. You have certainly heard about the third major financial statement called balance sheet. This is a summary of your assets and liabilities. It is based on another simple formula that says assets equals liabilities plus equity. Typical assets your B&B owns are long-term assets such as the property itself, the furniture, cars or equipment, and short-term assets such as cash or account receivables. Typical liabilities for your B&B business include short-term liabilities such as accounts payable and bank overdrafts, and long-term liabilities such as bank loans or bonds. Finally, your equity consists of the capital injected at the start of the business plus any past retained earnings. Conclusion. Now that we have seen together the fundamental elements of a bed and breakfast financial plan, you should feel more comfortable building solid financial projections for your B&B project. In case you wish to save time and money, we highly recommend you download our automatic bed and breakfast financial plan template in Excel, included in our ready-made B&B business plan package. It allows you to create a robust financial forecast for your project, fast and easy, and no financial expertise is required on your part. You also receive a full and pre-written business plan tailored to the bed and breakfast business. Visit businessandplans.com for more information.